So I want to welcome everyone, and I really appreciate, I don't know how many years DOR has been coming. Normally Janet Abrams has done these presentations. She just retired in January, lucky duck. And she's enjoying herself and traveling and golfing. But I did this presentation 2 years ago. We focused it on audits and what to expect in an audit, which is a very lively topic. But I feel like all our presentations kind of prepare you for an audit because it's what we would be looking for and what you should be doing, and always encompasses a little bit of record keeping. So today's presentation is a general overview of sales and use tax for campgrounds. So we'll kind of touch base on a few things. And it kind of follows publication 239. That's our sales and use tax publication for campgrounds. So that's something good to familiarize yourself with. My name's Holly Hoffman. I work partially out of my home office. I live in Amherst, so close by. And then I commute at least 30% of the time to Madison. So I work down there as well. I started out in audit, so I'm familiar with auditing. But now I work in the Office of Technical Services. We write the publications, the articles. We answer taxpayer questions that are more technical. So if you ever have a question and you write in, you can keep our email and show it to the auditor. If nothing is published post that email and your facts haven't changed, that should hold up in an audit. So that's one of the things I do. I kind of live sales and use tax, and even though I live it 24/7, I still get turned around and have questions just like you guys. So I totally understand where you're coming from. Today, while I'm speaking, absolutely feel free to ask questions. People behind me, I guess, try to stay in the camera. But people behind me, if you have questions, just go ahead and speak up and shout it out. There's no problem with interrupting. It doesn't have to be on topic. If you think of something and I pass a slide 3 slides ago, that's fine too. I'm here for you, so if you have questions, we should talk about it. Plus, it breaks it up a little. My husband says I'm not very interesting to listen to, so he just doesn't find tax interesting like I do, but whatever. All right, so I already told one person, but the only questions I cannot answer are if you're involved in an audit and it's specifically related to your audit. I can't answer the question, and as an auditor, I understand that, because when you're out there in the field looking at books and records, you see a different fact pattern. And when people ask a question, they're thinking some of the facts and not everything. So without knowing the whole situation, I can't give you a good answer as to why they're doing something or saying something. But anyone who does go through an audit, you can ask questions. You can ask them to explain how they came to that or where you can look to find information on that. So don't feel like it's just a simple answer. It is, and just accept that. You can ask questions. So I would do that. You should come out of an audit knowing more and understanding more about your specific business. So, all right. So I'm going to jump right into it. Our presentation is titled "To Tax or Not to Tax." I didn't have any follow-up fun stuff on the slides about that, but that is always the question, isn't it? I talked about publication 239 for campgrounds. Again, that has a lot of information and then has a lot of examples. Sometimes the examples are easier to relate to than just hearing an explanation of the tax law. We're going to cover a general introduction to sales and use tax, nature of sales and use tax, and then talk about your sales and rentals to customers, your purchases, which I heard a lot of buzz about use tax and when you'll have use tax, so we'll go through some of the basics on that. I'm not going to go into alcohol, beverage, and tobacco laws, but if you sell that, I got some resources. I also am learning excise, alcohol, tobacco at work. And we have created some new alcohol beverage fact sheets, which are much easier to understand and more simple. So I listed some of them in the presentation, but check that out. And then we redid the tobacco, cigarette and tobacco, and the alcohol beverage web pages. So information is a lot easier to find, and it's a lot better. It takes you right to the items that you're looking for. And then some resource information. And at the end, if you have questions or need assistance, it gives you email and phone number to contact customer service. Do not hesitate to contact customer service. They don't keep track of who you are. You can ask any question, and it's very useful, especially if it's a big part of your business or you're expanding and doing some new type of revenue stream or something like that, and you want to make sure you're doing it right. That's a good way to start off, is to call and ask or email us, and then we can give you the specific tax treatment. Before I start, did anyone have questions right off the bat? All right, we'll get right into it then. So the information that we're talking about today, when we're talking about sales and use tax, we're talking about relating to Wisconsin's 5% tax. And then we also have 66 counties that have 0.5% county tax. And the no tax counties are falling and starting to implement county tax. So keep an eye on those. We no longer have the football stadium tax. Of course, they replaced it with the county tax, but we do still have the baseball stadium tax. Doesn't seem like that's ever going to go away. Local exposition taxes, and then we have premier resort area taxes in certain areas, and more areas are looking to implement premier resort area taxes, so keep an eye on that. The Wisconsin sales tax is a 5% tax imposed on the sales price of retailers making taxable retail sales in Wisconsin. It does not apply to sales that are for resale. So when you purchase something for resale, sales tax just right out says it doesn't apply to sales for resale. The sales tax is imposed on the retailer, so if you're audited, they're going to look to you. Retailer is liable to the state for sales tax. We have in the law where you can pass that tax along to your customer. That's why we will often charge tax to our customers and not incur it ourselves. If you didn't charge sales tax on a sale that was subject to tax, then you're basically paying that out of pocket when you get audited. Not that that's going to happen. But that's why it's important to ask questions and make sure that you're thinking about what sales are taxable, because you don't want to have that expense unexpectedly 4 years later. A retailer that holds tax that it collected in trust for the state, which means you should not be touching that. It technically should go into a separate account. So the sales tax that you collect from your customer should not be lumped in with your other income. It should not be spent on anything, bills or anything, regardless of how desperate you are. That money is held, it's the state's money, it's held in trust, and then you remit it to the state. We have had every year, there's sad stories of businesses that struggle and go under, and just be aware that any money you collect is not yours, and you can run into legal issues if you spend that money. And the retailer is responsible for reporting and remitting the tax.
So are you saying we should be depositing the sales tax into a separate account?
Most people don't, but it's a way to keep it separate. No. No, technically it should be separated, but the whole point is be careful. Just because it goes into the same account that your income goes into, be aware that shouldn't be spending that.
The book's separate and tax. So
I mean, you
separately.
should be calculating your tax and identifying what you collected was tax and what you collected was your sales price. So it should be separated in that way. What sales are subject to tax? So this is really broad. But tangible personal property, it's items that can be felt, weighed, touched. A better way to explain it is generally they're not affixed to real property or to realty, okay? Doesn't mean everything that's fixed to realty is real property and not tangible, but it's a good rule of thumb. Tangible personal property also includes electricity, steam, gas, things like that. Also subject to tax, certain coins or stamps. This is items that are collector's items sold above face value, that kind of thing. Certain least tangible personal property affixed to real property. So that's one of the exceptions, and that always sounds confusing. One of the easiest ways to explain that as an example is if you have a personal residence and you use propane heat and you're getting propane from a certain propane company, they also lease the propane tank to you while you're purchasing their gas. Even though they come and install it and may affix it permanently to your realty, they bolt it down because that propane company retains ownership of that. They can take that back at any time if you breach the contract. That is tangible personal property, but it's technically affixed to realty. So that's an example of that. I don't know if any of you guys have communication towers on property that you own, but if you own the property and a communication tower is owned by someone else, that's affixed to real property, but it stays tangible personal property because it's not on property that they own. So that's another example to try to explain it. Certain digital goods, there's a whole publication on digital goods, but things that you receive electronically like music downloads, ebooks, things like that are digital goods. Now they have greeting cards and finished artwork. There's all sorts of things that you can get. If you have any questions about digital goods or if you think that might apply, that's Pub 240. And then these are referred to collectively as taxable products when we talk about everything I just went through. So next we have specified services. So I said all tangible personal property is subject to tax unless an exemption applies. Services are just the opposite. Services are not taxable unless they're specified. However, the trick to that is there's a lot of things that are services that are specified. The first category being service to tangible personal property. So of course that includes a whole host of things. And when we talk about service, we mean maintenance, cleaning, towing, painting, coating, anything that's working on an item, could be real or personal, but that's a service. Other specified services, parking, printing, photography, videography, and a big one, landscaping, is also a specified service. So we were talking a little bit before we started use tax. Use tax is a counterpart to sales tax. Wisconsin use tax is a tax imposed on the purchase price of taxable products or taxable services that are stored, used, or consumed within Wisconsin, and upon which a Wisconsin sales tax has not previously been paid. So if you purchase something from out of state and they are not required to collect Wisconsin sales tax, then you use it or store it, that item in Wisconsin, consume it, you're going to owe use tax on that item because you didn't previously pay sales tax on that item. If you purchase from out of state and they charge you properly sales tax and you pay it, you bring it into Wisconsin, you technically still owe use tax, but we allow a credit for the tax you properly paid to the other state, and everyone has higher sales tax than Wisconsin, so you don't generally owe anything. If anything changes on that, that may happen. Just because it's a Wisconsin company that you're purchasing services or items from Don't be fooled into assuming that they're properly charging you sales tax. Look at those invoices. If a Wisconsin company doesn't properly charge you sales tax, you owe use tax. You need to remit use tax. So, if Wisconsin did not have a use tax, people wonder why we have it. It's all confusing. But if we didn't have it, people would go to other states and purchase things that would hurt Wisconsin business owners because people would be going to avoid the sales tax and purchasing it out of state. And every other state that has a sales tax has a use tax, because if you have one without the other, it's an imbalance. So examples when use tax is due, I talked about if you purchase something outside of Wisconsin that's used in Wisconsin. A good example of that is Minnesota doesn't tax clothing. So if you go to Mall of America and purchase school clothing for your kids, bring it back into Wisconsin, when you store, use, or consume those clothes in Wisconsin, you would owe Wisconsin use tax. And there would be no offset because Minnesota doesn't charge tax on that.
That would be personal, That would be a personal.
Yeah, you would put that on your personal. Businesses that I've seen that get in trouble with purchasing out of state is if they have some unusual equipment breakdown or something like that where the parts aren't made in Wisconsin, and it's not your normal daily process to purchase from this vendor, but you have to go to a certain vendor out of state. Sometimes you forget because it's a one-time thing, but that might be another case where you're purchasing out of state and they didn't charge you tax. Internet purchases is a huge one.
Can I back you up again?
Yes. No, go right ahead. No.
So let's say you purchase that item to fix a piece of equipment, which you then use to do services for your campers, which you're charging that out and you're charging tax on that because you're renting that equipment out. So do you still have to pay the use tax on the part that went into that piece of equipment that you're then renting and collecting tax on? Do you ever ask?
Yeah, I know exactly what you're asking. So say, to make it easy, just off the top of my head, you rent boats to your customers. You only rent the boat. You don't use it personally in your business for anything else. It's always for resale. So you purchase that boat without tax for resale. If you need to service it or buy a part out of state, whatever you need to do, that's a service to exempt property and it's not going to be subject to tax, those
But if you use
repairs.
that boat personally and to rent, then you have to pay tax on it.
Right, yep. And if, say, an example is you purchase an ATV and generally it was rented out to customers that you didn't use it in your business, you purchased it exempt for resale. I don't know how long ATVs last, so 10 years later or whatever, it's looking kind of rough, you buy a new one, but you decide to keep the old one to use within your business. Because now you're not using it for resale, you owe use tax on the original purchase price of that ATV. And that use tax is due at the time that you begin using it in a taxable manner. If instead you have that ATV is 10 years old and you decide, oh, we're going to replace it, and you sell it, that still qualifies as exempt for resale because you haven't used it in a taxable manner.
Wait, okay.
Yep.
Because we just had some rental golf carts, we sold them to just to regular people, so would we pay tax on that?
So you purchase them without tax for resale, or they should have been purchased without tax for resale. You didn't use them in a taxable manner. You sold them, but when you sell them, your sale is taxable.
So it's a sales tax, not a use tax. So
Right.
it's still like the
Yep.
sales tax.
And it's a sales tax on the price that you charge your customers. If you use it in a taxable manner, then it's on the original purchase price you paid. Good questions. That is not dumb questions. So internet purchases are a big area. Purchases for resale that were used in the business. So we kind of talked about some examples of that. If you purchase items, maybe you sell them in a little shop for your customers, and you have a spill and you grab paper toweling off the shelf and use that to clean up the spill. you owe use tax on that paper toweling. So kind of, I know it seems little, but keep track. Maybe a little notebook or spreadsheet to write down those items. Trying to think of anything else. Internet purchases, since audit's on my mind, don't like the camera. If you have business credit cards paid by the business, or you have personal credit cards that you pay with your business funds, doesn't mean you're doing anything wrong, but it's paid with business funds and you probably account for it other ways. I would suggest keeping the personal separate from the business, because any cards paid by your business is pulled into that sales and use tax audit. So I've seen people who are executives and they had a personal credit card or a business credit card that they made personal purchases on, cigars, whatnot, and it wasn't taxed properly, and that all got pulled into their business sales and use tax. So just keep the personal separate, because it reduces your liability should you be audited. And then any credit cards, make sure you're looking through and keeping track of anything purchased out of state and that you have receipts for those items to verify that tax was paid or use tax was remitted. One of the first things they're going to do in an audit is pull all your credit card statements or request all your credit card statements, and anything that has an out-of-state state listed on the statement, they're going to ask to see receipts for those items. So, just a hint, tip. All right, campground sales and rentals to customers. So taxable sales by campgrounds. So your admissions, your campsites, your lot rentals, your whatever you want to call them, any charges to use your recreational facilities, those are admissions to the campgrounds and they're taxable. Any sales of tangible personal property, so if you have a little store and you sell items that people may need that they forgot or they ran out of, sunscreen, things like that, that's going to be subject to tax. Admissions to recreational activities, I kind of already hit that, but if you have events, bands, cover charges, if you charge extra money to rent skis or equipment or anything like that, it's possessed. That's taxable. Rentals of tangible personal property, I kind of hit on that. And when we talk about your taxable sales and rentals, it doesn't matter if it's customers or to your employees. So say you have a golf cart or an ATV and you rent it to your employee because they need it for some reason, that's fine, but it is still subject to tax. Sales from vending machines, and we'll talk about that. Some sales may not be subject to tax, but others would be. It depends on what you're putting in there. And then amusement devices, if you have any games. If you have a bar on your campground and you have casino games, those are amusement devices, and the admissions to those are taxable. The amount put in is subject to tax. Admissions to campgrounds, including charges for electricity, are subject to tax. The electricity kind of throws people off. It's regardless of whether the fees are collected on a daily, weekly, annual, or other basis. If you have seasonal campers or campers who stay longer than 30 days, sign up for the whole season, sign up for the whole year, that's still subject to tax. Lodging, such as...
It is even if you're passing it through. So you got a meter on your pedestal, and you calculate their bill based on the wattage they use, and they pay a percentage of your total electric bill that you pay. You still charge sales tax on that?
We'll get into the specific examples on electricity.
Okay.
I don't know why they have including charges for electricity on this slide. This is Janet's presentation. But as I said that, I thought we were getting into electricity, but it's just admissions and lodging that we're talking about. But it could include charges for electricity. But we have examples of different scenarios that identifies that. Lodging, such as a charge to stay in cabins, trailers, or RVs that are already set up on campsites. Lodging has an exemption if the lodging is for more than 30 days, then it's not considered taxable as lodging. But for a campground, because you have other things going on, it's still taxable as an admission. So there's no exemption or cutout on that for lodging that's longer than 30 days. Sales of tangible personal property, you might sell firewood, candy, soft drinks, prepared foods, electrical supplies, cigarettes, lighters. One of the items that is probably going through on the budget bill is taxing e-cigarettes and vaping products. So if you sell stuff like that, it's not taxed. It's still taxable now, but that's going to be added to as a cigarette. Hygiene products such as soap, shampoo, combs, those types of things. Over-the-counter medicines are taxable. Ice blocks for cooling are taxable, but ice cubes are considered a food and food ingredient. Those are not taxable. So Janet reminded me, tell them about the ice blocks versus ice cubes. So if you have questions about that, let me know. Paper and plastic products such as napkins, paper towels, paper plates, and plastic utensils are taxable. And pet food and supplies, collars, pet toys, things like that are going to be examples of taxable items. But everyone has different things at their campgrounds and what they sell. So basically, if it's tangible personal property, you're going to be charging tax. So we talked, yep.
Question on that firewood, if it's used, if they come up and say it's used for cooking, then it's non-taxable, right?
No, that's still taxable. Why would it not be taxable for cooking?
I don't know. I just heard that it wasn't.
No. You know what I'm thinking? They're thinking is if it's their primary residence, then certain fuels are not subject to tax. But in a campground, it's not going to be their primary residence. So no. Firewood is firewood, and it's going to be subject to tax.
Can I back you up to this
Yep.
30-day thing? It was kind of
Yes,
confusing.
30-day, yes.
30-day, you said, first you said it is not taxable if it's over 30 days. And then you said if you're in a campground, it becomes taxable because of...
So people are familiar, and there's been some confusion. I didn't clear it up. Lodging, like hotels, motels, and lodging providers, have an exception that if it's lodging for more than 30 days, then it's not subject to tax. However, in a campground, it's not just lodging. Campgrounds are a sale of admission because of the campground site and the activities available. So it's going to be still subject to tax. There is no 30-day, there is no if they stay for a month or they stay for a seasonal or they sign a 1-year contract that it's excluded from the taxable sales.
What defines the campground from an RV park, from a trailer park?
Campgrounds have additional recreational facilities. And my understanding, and it's not sales and use tax code, so I don't know the details or which people in Wisconsin regulate it, but there's no permanent residence allowed on a campground site. I don't know if RV parks are different than campgrounds.
There's no tenants.
The admission thing is hinged on having like the location requires you to purchase a site or rent a cabin to have access to the facilities, which may be the boat launch, the lake or the river to swim in, things like that. That's what makes an admission to a recreational event. So if there's none of that,
Or if the campground is closed down, you have 2 cabins or 3 cabins you wanna rent throughout the winter. So it's not during an open season, it's just, you have 4 season cabins that you can rent out.
That's a good question, and I'd have to look at it. But it depends if there's any activities available during the winter, but you're saying it's completely shut down.
Shut down. There's no pond, there's no lake access per se, there's no toys or.
They don't
things like
ice
that.
fish or anything like that? No?
I'm not on a lake, so for me, it doesn't matter.
That's a good question. I
When
want to
we-
know the
when we called
answer.
Eau Claire County, they said it didn't fall under a tax, but I don't know if they knew what they were talking about either.
I'm thinking an answer in my head, but I don't want to say an answer because I'm not sure. That's a good question. I have to look. Because it has to be that you're paying not just for the cabin, but for admission to additional facilities. And that doesn't sound like it would be, but I'm not sure, so I'll give you my card because I want to get that question so I can know.
If in this case, just saying the guy had a snowmobile, his own private snowmobile, now where does that lie in that equation? Is that, because is that his lodging, because he brought his own snowmobile, because he's doing something on that?
No, it
property?
has to be part of your sale to them.
To them, okay. That was
Yeah,
my question.
yeah,
You
no.
said ice fishing, well, ice fishing's out there, I don't.
Well, the admission would be access to the lake to go ice fishing.
So that would-
Yeah, that would be, yeah.
You can go into the public access to lake, it's not your property.
I don't want to confuse everyone, but also if your campground is open to everyone and there's no admission to swim in the lake or do anything like that, that changes whether or not there's an admission sale too. So if it's just open, they don't have to have a site there, that changes whether you're making a sale of an admission to a recreational facility.
Finding either seasonal or overnight and information.
So if you have stuff going on or unusual situations, please write in. I'm still new to this, so the more odd situations I get, then I learn from that. And that's what we use for our examples in our pubs too, is examples that you guys send in. Other admissions to amusement, athletic, entertainment, or recreational events or places might be taxable: golfing, hay rides, hunting and fishing, horseback and pony rides. If you have bands that come in or other little activities that you charge admission for, those would be taxable. Trying to think off the top of my head. Rentals. Rentals of boats, bicycles, scooters, the golf carts, ATVs, anything like that, skis, rafts, tubes, those charges would be subject to tax.
Okay, so, like with golfing or with, any like activity or whatever. So say you wanna charge them the $10, then you would have to charge them $10 plus the tax, or the sale is the $10 minus the taxes, whatever makes it the $10 minus the sale is whatever. is minus
It depends on how you want to do it,
Okay,
but if you're gonna charge them $10 and that includes the tax, you need to tell them, have a sign or something, or the receipt needs to say that it included the tax.
okay,
And then that's how you calculate it, you back into the tax when you report it.
okay,
If you don't have anything and you say it's included and you only charge $10, if you get audited and there's no record that it was included, you're gonna be charged tax on the $10.
right,
They're not gonna back into it.
okay. That was what we were saying earlier. If you don't charge the person when you're audited, you pay it on the back end. Okay,
Yep,
thank you.
yep.
So on that, if you have a sign in your store that says all sales here include tax, you're covered? Or it has to be on the receipt?
It has to be either a sign or on the receipt. On the receipt is nice, so if people, say a business comes in and for whatever reason and they leave and that's on their books and they get audited, they have a chance to come and ask you why you didn't charge tax. You can be like, because our sign says it includes it. And then they'd be fine. But you want to have it either displayed or on the receipt or both so that you're documented for when if you get audited.
One more question with that.
Mhm.
So I have candy bars are $1. When they come up to the register, I ring in 95 cents, it's $1. So my tape shows that it's 90, that way the kids don't have to get 6 cents.
Right.
So in my recording, it shows it, just because you walk in and it says $1, now you're telling me I have to pay 5.
Yeah, no, that's fine. Oh, this is killing me. Okay. The next topic we're going to is vending machines. I don't know how many people have vending machines, but if a campground controls or is the operator of the vending machine, then the campground's receipts from taxable sales made through the vending machine are taxable. And a campground's considered to have control over the vending machine if they have the right to access the machine for stocking and restocking or removing receipts from the machine, or if the campground owns the tangible personal property that's sold through the vending machine. Items you might sell in a vending machine that are taxable. Nowadays, there's so many things. Vending machines can do anything. Candy, soft drinks, hygiene products, medicine, sunscreen, toys, way back in the day, cigarettes. Not taxable items you might sell in a vending machine, chips, milk in a carton, water that's unsweetened, cookies, popsicles, or newspapers. That's not an all-inclusive list, it's just some examples. So depending on what you're selling, if that item's taxable or if it's considered a food or food ingredient, will determine if it's something you should be collecting tax on.
So if they buy water out of a vending machine, it's not taxable. If they open the cooler and buy water, it's not taxable. Water's just not taxable. Okay.
If a campground controls or is the operator of video games, pool tables, pinball machines, foosball machines, or other amusement and devices, again, if you have a bar and you have video gaming machines, that would be one of these. If you're the operator of that, you're also liable for the sales tax on admissions. Now, some people have machines through, I can't think of off the top of my head, some of the vendors. I used to know them, it's been a while since I audited. But you might hire someone to supply machines for you and they basically operate those machines, they collect the money and stuff, and then you get a commission off those machines from them. You don't pay sales tax on those commissions. The third party person is remitting sales tax and taking care of that for you.
So our laundry machines, what we do a 50-50 with a company, we don't pay any taxes on that?
If they're the ones operating them, then they should be doing that.
But if we operate it, we should.
Right.
I was taught laundry was non-taxable.
It's in here. Maybe it is non-taxable. We'll get to it.
Are you gonna get through more items like retail items like food, candy?
She wants a whole list.
Okay.
It is,
I did not include the food and food items in our presentation today because that's a whole presentation in itself. Let me tell you some resources to go to. On our website, at the very bottom of the page, you see a training. You click on that, and it brings up a list of topics, and one of them is for grocers, and there's a video you can watch about what's taxable and how to figure out if your items are taxable, your food items, if it's prepared food, stuff like that. And although it's for grocers, it applies to other people. So that's a nice presentation you can watch. And then we have the grocer's pub, or we have the restaurant's pub. So if you look at the sales and use tax pubs, there's one specifically for restaurants and grocers.
Can you use the guide though, if you go to your grocery store and they don't charge you tax on milk, and you're selling milk, you're okay, or you're buying bread?
I mean, for some of those things, it works. But then a grocer may sell more than, if there's a flow chart, and if you sell more than 75% taxable or prepared foods, then certain things are taxable. And you may not sell the same percentage as a grocery store of taxable items. So I don't want to say just copy someone else. If you have questions and the video doesn't cover it, I would write in and ask. We can go through that.
The last session I said, and there was some flow chart for water and ice too, is that still?
I don't
It's probably
recall.
been about 6 years since I've sat in one, and then it was, if so much percent of your sales is water and ice, it's yes, and I can't remember.
I think that's still what I'm referring to, but I will look. But yeah, there is a flow chart. That's in the grocer's pub for prepared foods. And it's also, if you go to that video, they walk you through the flow chart. So that might be helpful. All right, sales of electricity. This is what you were asking about. Campgrounds charge includes electricity. If you have a site that also includes electricity, the wholesale is taxable. The campground pays tax on the purchase of electricity. Hold 1 second. Let me go through this and go through the examples. Charge for electricity that is separate and optional. We're going to explain examples of when it's separate and optional. The sale is taxable still, but the campground can purchase that electricity without tax for resale. So determining if it's a separate and optional sale of the electricity. If the customer can pay a lesser amount for the same campsite, not a similar campsite, the same campsite, without electricity, the electricity is separate and optional. If the customer can't pay a lesser amount for the same campsite without electricity, the electricity is part of the charge for the campsite, is not separate and optional. So if it's separate and optional, you can purchase the electricity without tax for resale. You still charge tax to your customer. If it's not separate and optional, you're charging tax, but you can't purchase that without tax for resale. It's just an incidental sale of electricity with the campsite.
We have seasonal people that we charge them electric, to recoup some, what the electric is. We, per kilowatt hour, we don't charge them more than what we get charged from our electric company. Should we be taxing that?
So you tax it to them,
Well,
but you should be purchasing without tax for resale. Because you're charging them based on use.
But how do you, I mean, they're just, I mean, it's 20 out of 100 sites. And so unless you have a meter for those specific sites, you're not, you'd be buying the whole campground without tax.
You can turn into your utility provider a percentage that you want to purchase exempt. You can run some scenarios and try to determine a common percentage. And just tell the auditor, this is how I came up with my percentage. It's not going to be exact, but it should be close, and you should have a reason of how you came up with it.
because I know you can't charge them more than what you're charged. You can't make money off electric. That's what our accountants told us. Like We Energies is who we have our electric company from. They charge 13 cents per kilowatt hour. The first time we ever tried charging electric was a few years ago. We were charging them 15 cents per kilowatt hour. We kind of got in trouble, well, not in trouble, but we got told you can't charge more than what the electric company actually charges you. So we brought it back down to what the electric company charges us, but then we added a meter fee on there. So that's how we kind of made up the difference. I just need to know if we should be charging them tax on either the meter fee or the electric. Like, say she used 25 kilowatts in that month, should she be charged on the meter fee and the electric tax, or just the electric?
Okay, so it should be the meter fee and the electric, but you should be purchasing that electric without tax, or when you charge her, you shouldn't be including the tax if you did get charged tax. You shouldn't be including that. You should be charging her on the sales price of electricity. If you figure out the 13 cents per kilowatt hour, that's fine. But just alerting you, you shouldn't be charging tax on tax.
Okay.
A couple of years ago, when they had, the other lady had this, she said that if we were being.
She was wrong.
Because now I'm right, she said, because we never did charge tax, and she said, no, you're paying tax when you pay it, so you can charge it to your customers and you're just recouping it, so you don't have to because you've already paid for it. So she said we can recoup the sales tax we paid. when
Well,
we paid
that's
for
the
it.
end result. That's the end result. But what I'm telling you, the technically accurate, so there's certain things you can do, and if you get audited, the tax effect it nets out. So you pay tax on the electricity, you charge your customer what you paid, it nets out. You didn't upcharge them, the meter fee would still be subject to tax, so you would charge tax. It's just gonna raise a question in the audit, and you have to be able to explain what you did. This is why I did it, so you don't get caught up, you know what I mean? And they don't try to pick up something.
But then I went to this class, and she said to do it, so then we did it.
I try to say the technical, she's right, but my boss gets on me so much about that's not technically correct, so I'm trying to teach you the technically correct. I would not panic if it nets out, but just be sure when you're not charging it on the right side of the transaction, that if someone questions it, that you can explain, I paid it here, I didn't upcharge, the tax was remitted, you're good.
You're just saying
Does
it'll
that
be
make sense?
easier when they come to audit. That'd be the last questions, basically, if you move the right way.
As long as you do it consistently, it doesn't really matter. The technically accurate way is to charge tax to the end customer purchased without tax for resale. I'm not going to tell you how to do it, but just be prepared that that may be a question, and then you can explain it. So let's go through some electricity examples. A campground offers campsites for $25 per night. We're talking about the separate and optional. All campsites have electrical hookups included. The customer is required to pay $25 per night regardless of whether the electrical hookup is used. The campground's $25 charge per night is subject to Wisconsin sales tax as an admission. That's not in question. The campground's purchase of the electricity supplied to the campsite is also subject to tax. It wasn't a separate and optional charge. The customer didn't have the option to rent that campsite, not use the electricity, and get charged a lesser amount. So the campground offers campsites for $25 a night. All campsites have electrical hookups. If a customer wants to use electrical hookup, campground charges an additional $5 per night. Campground's $25 charge per night charge for the campsite, subject to tax, as an admission. In addition, the $5 per night charge for electricity is also subject to Wisconsin sales tax because the sale of electricity is taxable. In this case, the electricity is a separate and optional charge, the $5 charge, so the campground can purchase that electricity without tax for resale. And again, how you determine what percentage you want to report as non-taxable for resale to your electric company. You just need to figure that out. Some people do have separate meters for campsites, some don't, a lot don't. So just keep track of how you calculate that. If you've been paying tax, not purchasing any electricity without tax for resale, and today you hear, oh, I was charging it separate and optional, I can get some credit back on tax I paid on electricity that I resold. You can submit a buyer's claim for refund through our BCR, and you can do that. How many people have My Tax account set up? Super easy to do it through My Tax account. If you haven't ever filed one before, you might need help getting that added. It's another account that gets added, but you don't need to get signatures of your vendors if you do it online through My Tax account. It's pretty decent. All right, Campground has 2 campsite offerings. Type 1 does not include electricity and is $20 per night. Type 2 includes electricity and is $25 per night. Campground does not reduce the charge for Type 2 campsite if the customers do not want electricity. Campground's $20 and $25 per night charges are subject to Wisconsin sales taxes admissions to amusement. That's not in question. The campground is not providing a separate and optional charge for the electricity. It has 2 different campsites, but the electricity isn't optional, it's set prices. So the campground has to pay sales or use tax on its purchases of electricity provided at the Type 2 campsite. Does it kind of make sense of when it's separate and optional? Those examples are all in our pub, so if you have more questions about that. Internet access services are taxable. July 1st, 2020, that changes. Federal law bans being able to charge tax on internet access charges. So next year, coming 2020. But for now, it's taxable. Cover charges, sales of used equipment, campground packages, which includes admission to the campgrounds and its facilities, along with other taxable or non-taxable property services, is subject to Wisconsin sales tax. Assuming that more than 10% of the purchase price or sales price of the package is related taxable products. Non-taxable sales, food and beverages, alcohol beverages, soft drinks, candy, and prepared foods are taxable. But other general food and food ingredients and beverages are not taxable. Sewage disposal, the tanks or service that you provide for people, those are disposal services and those are not taxable services. Security access cards. If you ask people to put a deposit down for a card that gets them maybe into the pool area or something like that, that deposit is not subject to tax even if they lose the card and you don't return their deposit. Damage fees, if you rent equipment or if there's damage to the campsite and you charge your customer a fee for the damages, that's not subject to tax. Self-service laundry machines are not taxable. Okay. And that doesn't matter if the machines are tokens, operated by tokens, coins, or magnetic cards.
Us purchasing a machine is not taxable, or the money you collect from it?
The money you collect from it's not taxable.
What about the machine for the soap and paint for 20 years?
Yeah. So the $1.50 they put in, I don't have to.
Right.
pay 8 cents
I was
tax.
gonna say, I've been back,
Always do, me too.
Gift certificates and product vouchers. That's a good area. The sale of gift certificates is not taxable. That's if you just sell $20 gift certificate. That's not taxable because you're not selling something. It's kind of like cash. The sale of a product voucher, something that's good for one night of camping or good for a rental or something very specific, is taxable if the item that it's good for is subject to tax. If you have a third-party promotional company that's selling discounted certificates or vouchers, the third party is not going to be collecting tax, and the seller collects tax when the certificate is redeemed. So I just want to go through a quick example because this was new to me. But if a third-party promotional company is selling certificates, they sell a $50 certificate for $30. When that customer comes in and redeems that certificate, you are charging tax on the sale, $30 that the customer paid to the promotional company, plus whatever cash isn't covered, you know, whatever isn't covered with that $50 certificate. Does that make sense? So
You're
it's not,
talking like a Groupon or something?
yeah, something like Groupon. I don't know how Groupon works. They're third party completely, right? So whatever your customer pays to Groupon, that's the dollar amount that is taxable if they cash it in on something that's taxable. Say
Groupon isn't collecting the tax?
Groupon is not collecting the tax.
So we have to.
Yeah, but not on the value, the $50 value or the $90 value. You're collecting tax on the amount plus the amount the customer paid to Groupon plus any additional cash that isn't covered by the certificate that they provide. Yep.
Yeah, what about if we get reduced tickets, if we put together a package, we get those tickets from another company, and then we put a package together that we sell with connecting?
That's the same thing, but you're the third party
Okay, that's,
to them. So they're going to be collecting tax on that. But if it's a package that you're selling, it might be part of that if more than 10% is taxable in that package, it's going to be all taxable. Which doesn't affect what that other place that you sold tickets for, it doesn't affect their tax treatment. It's just you're selling in a different item.
Donation, what's tax on that?
Okay, so if you donate,
Let's say you're overnight, one night food camp, you donate, and maybe you put in there a t-shirt, and maybe a toy or something for the child or something. Let's say it never came back, the chicken never came back, would you still give out the stuff, the t-shirt, you still give out the toy? What part of that package is taxed
okay, items that you give away,
in that package?
you purchase with tax. That's not for resale. The gift certificate for like a night stay over, that if you're not charging, if the nonprofit or whoever you're donating it to isn't paying you any price for that, I would mark on your certificate so that you know who it was from, that it was donated. Because when someone comes in and redeems that, there was no sales price on that, it reduces the taxable sales price. So you don't charge them tax on that amount. Say you donate a $50 certificate. I would mark on that certificate somewhere that it was donated so that when it gets remitted to you or turned in, you know that and you can say, oh, I know this was a non-tax situation. So there is no sale there. When they remit it, say they purchase $100 in admissions, that's reduced by $50 of that certificate, and so you charge tax on the remaining $50. If you don't remember, it's in the pub.
Okay.
An example just like
Give
this.
away a free stay.
Yes. If you give away a free stay, but you have to be able to identify that it wasn't a different promotion where you charged some amount or received some amount for that certificate. Does that make sense?
So if you did a buy one night, get one night free, and the sites are $50 a night, so it was $100 value, but the customer paid you $50. You're only gonna pay tax on the $50 you collected, you're not gonna pay it on $100.
Right,
Okay, just making sure.
right.
Okay, I think that's where most people are probably going.
Yeah.
Right, so if everything was free, and that one night was absolutely free, and you didn't care if you stayed 2 or 3 or nothing. There's nothing on that night stay, it was free. It was
Right.
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 Because I mean, I didn't pay any money.
I know. I didn't get to use tax. See, this is my problem. I get talking and then if you guys need to move on, I don't know if there's another thing in this room.
With that for,
I'm gonna keep going until you guys all walk out. Don't be sorry. So campground purchases, this is what you guys wanted to talk about. Taxable purchases. If you're purchasing advertising, brochures, and literature that's used in Wisconsin, that's taxable. Purchases of computers, computer supplies, software, email services, Telecommunication
What
services.
about, like software as a service, so reservation software, cloud hosted? As far as use tax.
Okay, so you know how all services are not subject to tax unless it's specified?
Yep.
So anytime that you're purchasing software as a service, and we have to be very careful that it actually is and you're not purchasing software, then you have to look at the services provided to determine if they're taxable services or not. And I'm not going to give you an answer off the top of my head, but I can give you my card and you can write in and ask.
I try.
But software as a service, if you're not running that, if you're just logging into something, which is, I'm pretty sure that's what it's going to be, then you just have to determine if it's a taxable service or not.
So it's the tax, okay.
So, write me. Cash registers, copy machines, supplies, digital music downloads, ebooks, paper, pens, pencils, basically things you use in your business. Also taxable purchases, motor vehicles, other equipment used by the owner in the operation of the campground. We kind of talked about that. Cleaning supplies, ice machines, communication equipment, telephones, loudspeakers. Communication and data cabling is taxable, so if you have that installed, that's subject to tax. Recreational equipment, unless solely for rental to customers. Restaurant equipment and supplies, televisions, vending machines, video games, pool tables, that kind of stuff. Taxable services purchased by campgrounds, cable, internet, again until July 1st of 2020. Landscaping is a taxable service. Repair, maintenance, and inspection of equipment. Repair services to furnaces, boilers, water softeners are all taxable. Telephone service is taxable. Email service is taxable. Property resold to customers is not taxable. Your purchases of property that you resell to customers are not taxable. Candy, soft drinks, firewood, magazines, basically our list of items that are taxable sales, you can purchase without tax for resale. Paper and plastic disposable items that are transferred to customers when selling but not giving away, candy, soft drinks, prepared food, you can purchase without tax for resale. If you're having real property improvements done on your property and your facility, that purchase is not taxable. But if you're buying the materials and doing the work yourself, your purchases of materials are taxable. That's not a real property improvement, it's a purchase of TPP, tangible personal property. If you're hiring a contractor to purchase and install the real property, you don't pay the contractor tax. The contractor is the consumer of those materials, so they're paying use tax on that. Examples of real property improvements: constructing buildings, roads, walks, bridges, fences, ponds, swimming pools, either partially or wholly in ground. Swimming pools installed partially or wholly in the ground is real property, but maintenance and repair to swimming pools, regardless if they're above ground or in ground, is tangible personal property, is taxable. Parking lot lighting is a real property improvement. I already talked about that. Equipment like playground equipment, that's tangible personal property even if it's affixed to the ground. So if you do playground equipment or slides or things like that, that's taxable. This is the alcohol beverage, the new fact sheets that you might be interested in. And then make sure you sign up for our electronic mailing list. It'll give you updates if anything changes in the law for sales and use tax or any new pubs come out. And then this is our contact information. I'll pass out cards to the people who have questions. Otherwise, contact DOR Sales and Use at Wisconsin. If you want to revisit something I said, you can say, Holly spoke to me, can you pass me on to her?